Hey everyone, really excited for the very first edition of the EVA European Valuers Alliance quarterly update snapshot with your MJ Group Super Prime valuers, myself, Rob Cohen.
And myself, James Wild.
And today our very special guest, James Wier, the Director of International Clients from BPCE and one of the co-founders of EVA. Welcome, James.
Good afternoon all. Thank you very much for inviting me.
So everyone, this is a new show. We're going out to the world. We are sharing with you all of the latest data and intel as we find it across Europe. And the format of this show is going to be quarterly updates in line with the data and intel that we produce at EVA. And we will be spotlighting and providing a snapshot on a different European country from one of the EVA partners every quarter. Today, starting with James in France. And just to give you an oversight of EVA and the European Valuers Alliance, it's 11 leading independent valuation companies operating in 15 countries across Europe with more than 750 professionals across 40 offices, having valued in the last year over 500 billion euros worth of real estate in both commercial and residential. And we're here to provide you, Europe and the world with all of the latest intel and data. James.
Thank you very much for inviting me yet again. Very kind, very honored. Yes, EVA. What is EVA? We've been in existence for the last 5-6 years. And we've been growing every year, even during COVID, which was not an easy time for marketing or anything like that. Our business across our network has grown, which is great. It's particularly important to us in France because we have lots of, quite a few pan-European contracts where we have work in other countries. So that might not be an awful lot of work, but we might have about 2 or 3% of our portfolio's value maybe in another country. And without EVA, we might not be able to have that work. So that secures our French work, which is excellent. As Rob said, we are 11 members in 15 countries. Hopefully, we will be signing up another one before the end of the year, Bulgaria. We're actively looking to strengthen our presence in the Balkans because there are quite a few valuation mandates, which are really based in the Balkans with the Norway, Sweden, Finland, and Denmark. So we're looking for new partners there to fill the gap so we can respond to those Balkan contracts. Very pleased to be questioned by James.
Brilliant. So we're going to go straight into the questions so that we can share with you all of the latest insight, data and intel. And that's going to be the format of the show on a quarterly basis. James.
Thanks, Rob. So great to have everyone sort of back in the office today. And I think that's a really good point to start, actually, in terms of the office market. So with employers obviously pushing for a return to the office over the last 12 months, I just wanted to get James's view on how the office market has performed in France during that period.
Well, in France, they are pushing and they're not pushing, if you know what I mean. Basically, with teletravail, working from home, profitability's gone up and people are doing an awful lot more. There are certain people in our office who think it's a bit of an abuse because they've got no more traveling time, but they're probably working 3 hours a day more because they're not talking to anyone and they're not coming into the office. The Paris market is holding up. Central Paris is holding up very well, the CBD and the Centre West. La Défense, where you got the big towers, that's not looking too good at the moment. And in the what we call the first and the second couronne, further out, where you probably got a travel time of about an hour and a half going into Paris, that's suffering. Last year wasn't particularly a bad year, but the second quarter this year, we are seeing in, I would say, 5 or 6 sub-markets, take-up has dropped. And we have seen rental values dropping as well. And it's going back to really the core, the CBD It's the rush to quality. It's where people really want to be. That's holding up okay. So it's a bit of sort of 50-50 at the moment. Our office, just to give you an idea, we are sort of now going into flex office from September. So we've had our teletravail, now we go to flex office. And us as a banking group, BBCE, which is Bank Popular Kestevan, we are doing what lots of other banking groups are going to be doing, and we are reducing our space by about 40% over the next 5 years. So, being the third largest bank in France, if we do that and everyone else does that, well, the mathematics, we can see what it's going to do to the market.
Yes, thank you, James. So it sounds like our sort of hybrid working, as we call it here in the UK and London, is the equivalent to your sort of flex office environment. And it sounds like the office providers and also the employees are starting to adapt to that model. And I've noticed one thing in London, offices have become a little bit more proactive in just in terms of the arrangements of their office, trying to really encourage people back to the office. Is that something you've seen at all in Paris and France?
I think they're doing their best to, but the problem is that people have got so used to working from home where it's adaptable, where they can, and they've seen people are just getting more work done. I think it's very important. We've got two things here. For someone my age, and I won't say what that is, I've worked in an office for a long time, so I can now work from home. I can be fully independent, etc., etc. But I think it's very important for the younger generation who are just starting out, particularly, I don't know, 24, 25, 26-year-olds, who they need to go into an office. They need to have client meetings, and they need that discipline. And I think those are the people we've got to try and get back in the office and nurture. I think that's going to be very important going forward.
Yeah, definitely. That sort of on-the-job sort of training and interpersonal skills, which you do get from being face-to-face, invaluable. I think that brings us on very nicely to the residential market and the demographics there. But across the UK, we sort of coined the expression the race for space, whereby a lot of city residents were moving into more suburban areas. Was this the case that you saw in France, and has this trend continued at all in the last 12 months?
It has continued, and it is continuing. People just want greener space. I can understand that. They want more. They're working from it. They just need more space. And we have seen. Well, let's just say Paris for a moment. We've got 3 markets in Paris. The market which is around the 10 to 11,000 euros a square meter, that's suffering. And there we're basically seeing over the last 12 months, values have been dropping slightly, which is quite unusual for Paris. Then we have the segment which is between the 15 to 20,000 euros a square meter. That's holding up okay because there isn't an awful lot of it, and people are rushing to put their money into residential because it's such a safe haven. And then we have the super prime of more than 25,000 square meters, and that is still incredibly hot. I valued something not that long ago, 500 square meters in central Paris, and it did not shock me at all to say it was worth 25,000 euros a square meter. And that's for someone who comes to visit his flat twice a year. The suburbs, yes, the prices have gone up. I mean, where I live, the values have probably gone up in the last year and a half by about 15%, which pleases me, but I'm not moving, so it's pretty immaterial.
Yeah, no, thank you, James. Again, it's something we've seen here in London, across many of the other cities in the UK, coined a little bit of a sort of donut effect, whereby the centre of those cities has had a bit of a sort of outward migration for people moving to the suburbs. And sort of holistically across some of those markets, Rob, I think similar to France, maybe about a 15% sort of growth in the last 12 months on sort of a national average level. But just moving on to some of the super prime sectors in France, I know we touched upon it just then, but how have those performed, James, in the last 12 months?
Well, the other cities, they've just found that prices going up. I mean, that we're talking Toulouse, Bordeaux, Nantes, Rennes, Lyon. I had a friend who moved from where I live to move to centre of Angers, and they were very surprised they were paying more for less space in Angers than where I am, and I'm just out of west of Paris. So all these places where you can get Angers within 2 hours, you can get to Toulouse within 2 hours, Bordeaux within 2 hours. I mean, all the prices are being driven up by people relocating. And you see that down in the south of France, even in Saint-Tropez and those sort of places. Prices aren't dropping at the moment. There might be less transactions because Saint-Tropez is like a favorite destination for the Russians. You even have restaurants with some menus translated into Russian. The locals hate it apparently, but well, um, but you're not seeing the prices really dropping at the moment. I'm not saying they're rising, but you're not seeing them go to the floor.
Yeah, no, thanks, James. It's interesting. Obviously, in France, you have sort of a few areas of those sort of real super prime sectors. Obviously, the sort of central Paris, and like you touched upon there, in terms of the Saint-Tropez, Nice, and Cannes towards the south of France. And I'm not sure. Are they sort of on a rough level in terms of the sort of super prime rates, or is Paris the real sort of leader there in super prime?
In Paris, super prime is probably between 25 to 35,000 US a square meter. And if you've got a view on the Eiffel Tower, with a terrace, you could probably go to 40. Saint-Tropez is probably around the 40, 45. Best Can might be slightly less. I mean, the super, and we're only talking about not even 1% of the market here, even less. It's all pretty much holding up very well, and it's all about the same sort of level.
Yeah, I think across Europe, all of our data and intel is showing that super prime has performed exceedingly well, and there's a trend there. It's copy paste across Europe. There is a lot of money out there that, like James said before, wants to go into super prime real estate because it's perceived or believed to be safe haven in especially high inflation economies, and anyone that's subscribing to the EVA data, whether now or after the show, you'll see across all of our European markets, you'll see that trend continues.
Yeah, thanks, Rob. And we've seen a lot of trophy assets trade in the last 12 to 24 months here in London, across the UK, and not only residential, but also sort of trophy asset office buildings, such as on Regent Street, Oxford Street. We've seen there. So I think that's a sort of a similar trend which we've seen across Europe, James, and France.
But we haven't had this quarter, last 2 quarters, an awful lot of really prime, massive deals. The problem is, what do you buy with your money once you've sold it? I had a client last year. He had an offer on something I valued 15% above my valuation. Well, which embarrassed me slightly. But I said to him, well, fantastic, you should take the bid, but what are you going to do with your money? You have to reinvest it. And he goes, that's the problem. We can't, so we're going to say no. You've got to find these properties, and there aren't that many around. And we have in the last 6 months really seen anything that sort of jumps up.
Great, thanks. I know we've broken records here in London in terms of some of the highest capital value residential buildings which are sold. And I think you were just going to bring us news of one in just across the border in Poland, actually.
Yeah, well, that is an office development that was done. It was the biggest development, which is biggest deal ever done in Poland and Central Europe. And it was done at about 500, it was 75,000 square meters, and it was transacted at about 560 million. It was a hotel, a bit of a shopping center, some offices. And as I say, that is the big thing that sort of stood out in Poland. And I think personally, that's probably one thing which is going to stand out in Europe, to be honest, last quarter.
Yeah, no, thanks, James, for that. So just coming back into the residential sector, last year we had coming to the close, actually, the stamp duty holiday, which we saw in the UK, which was a government incentive to boost the housing market. Was there any similar incentives in France at all, which the government initiated? Simple
answer, no, they didn't do anything. I think the transaction costs are probably lower in France than in England. I don't know. I've been out the country for 24 years, and I don't know what your stamp duty is at the moment, or the levels there are. But in France, you basically pay 7% plus some agents' fees in France, which is painful as it is. But I think we're talking lower levels than you have in the UK. But they didn't make any measures to help the market for residential. The residential market, investment-wise, it held up very well as it is. And I think they gave away so much money during COVID as well. If they start giving away money for that as well, the debt level in France will be even worse than it is already.
Yeah, no, thanks. We had absolutely record-breaking year in 2021 in terms of transaction volumes, not only in London but across the UK. And just coming back to that race for space, the market has sort of, it did quieten off slightly towards the second half of 2021, with obviously that incentive being removed from the market, and a slightly cooling market in the first 2 quarters of 2022. So. Just wanted to come on to inflation and a few economic indicators. Certainly in the UK, we've had sort of record inflation, and one thing that's been sort of hampering the economy. Obviously in France, inflation has risen from just under 3% in January 2022 and up to over 5% now as of May. So quite a sharp rise there. Obviously France, being part of the Euro and the ECB, hasn't had the ability to control its own interest rates. I was just wondering if there's been any sort of government intervention there just to try and dampen the inflation and maybe boost the economy somewhat.
There hasn't, but you're right about the inflation. I was at a conference yesterday, the 14th Assis, which is a big French thing they do every year, and there was economists talking about inflation and the effect it could have on the yields. And the big fear is, I know in the UK you're talking about maybe inflation hitting 10% in this year, at the end of the year. France is already, I think, about 7 or 8%. And who knows when it's going to stop. But the fear is as inflation goes up, yields are going to go up because borrowing rates are going to go up, OAT is going to go up. So the message at the end after the guy was talking was, I wish we could stop talking because he was getting quite negative. But the fear is what the impact inflation is going to have, because we haven't had inflation of any sizable level for so long. The fear is the yields might jump 50 bits. I don't know. If you go from 7 to 7.5, that's painful, but it's not as painful as going from 2.5 to 2.75. So.
Yeah, definitely. I think it's certainly a global and European issue across most countries, that inflation. It's just at what point people maybe start to, maybe invest, or their sort of investment decisions are then based on inflation and what returns and yields they can get, whether it be sort of in the residential sector or commercial or even industrial sectors there.
Yeah, I mean, let's just remember, everyone, historically, investors and institutions love driving into real estate through inflationary markets, as they believe it's a great place for investment to protect from the macroeconomic and fiscal policy. Historically, that is. Currently, we're in different economic conditions off the back of multiple changes in economies through the Eurozone, quantitative easing, then everything that's happened with COVID, to now the challenge of inflation and interest rates all at the same time. So what we're facing at the moment is a multiple layered fiscal policy and economic variables that we probably haven't faced previously. What I'd like to touch on, James, and it's really the hot spot and the talking point of most of Europe, is the logistics, warehousing and distribution market. It's really where everyone is going and heading. I'd love to have an insight of what's happening in France and maybe share with us some EVA data and intel of what it looks like across our pan-European partner zones.
It's quite simple. In France, prime logistics is a smidgen under 3%. Which is a level which is quite shocking, but I'm no longer shocked, if you know what I mean. I mean, I remember back in 2007, the hottest the market got to was 6.2, and everyone thought, oh my God. But now, something slightly under 3% is not shocking. I know there was a deal done on the outskirts of Paris at 291 just after Christmas. I won't say who did it because when I mentioned it to the person, they did say, please don't say it to anyone. But it was sub 3% for logistics. And everyone's saying, why? And I think there are three reasons why it is so hot. We're actually seeing rental growth in logistics in France, which we've never really seen. It's normally over a 10-year period, it will go up and then it'll come down, but every 10 years you get to the same sort of level. But now we're actually really seeing rental growth. It's not just down in Toulouse or Bourges or Doge, it's a bit everywhere. Obsolescence is no longer an issue. We used to always say logistics, I'm sorry, after 20 or 30 years, you knock it down and start again. You don't. There is no obsolescence on a warehouse. You just give it a coat of paint and you got the cost of holding it. It's not like an office building which you have to refurbish every 10 years. For logistics, you just let it go. And also there was a new law that was passed in France. You can't just build logistics everywhere. You can't just build a logistics park or activity park. And so there's a lack of land for the first time ever. And so people are just rushing to buy anything they can, even activity parks, which they can demolish for logistics on it. So we've got three factors which is driving the yields down. How long that's going to last, who knows? The cost of money has been very good for the last few years. It is rising. You mentioned interest rates, and just going back to something in a moment, interest rates. We are going to see, I'm pretty certain of this, maybe a slowdown in the housing sector in the number of transactions this year. Banks are not lending any longer at, let's say, 1%. It might be 1.4. Those rates are going up, and that can only be a break on the market unless people accept for their money they're going to have 20% less space or 15% less space. But going back to say logistics, it's a phenomenon I think we see across Europe. Germany yields are low, Holland yields are low, but historically they've been low. Spain not particularly so, but it's the same. The logistics, which has been driven. Market has been driven by a lot by COVID, distribution markets. It's going to continue being hot, I think.
Yeah, and it sounds like a similar story. I mean, across the UK, it's that really sort of grade A retail warehousing space that's highly sought after here and really driving the market. So James, in terms of, just to maybe close out, I understand that there's a new government bill whereby buildings over 1,000 square metres are having to be upgraded to modern standards, and that's from everything from commercial to residential. So I was wondering if you could just tell us a little bit more about that.
Yeah, it's a subject which has been going on, I'd say, it's been talked about for the 5, 6, 7, 8 years. But like lots of things, people put their head in the sand and think, don't worry, it's not going to apply. But it is now, it's there, it's law, it's called the Décret tertiaire in France. Office buildings, tertiary assets of more than 1,000 square meters, or apartment blocks which are over 1,000 square meters, but you've got lots of them. They have to be energy efficient. And we have the DPE, which is a classification for the energy of a building, which ranges between A and G. And as at, I think it is September this year, people have to register their buildings to see if they have had a DPE done and what grade they've had. And that's going to be done by September this year. All the buildings have to be registered. And if you have works to be done, you have within another 3 or 4 years to do them. And then there are some cut-off points where I think it's in about 6, 7 years. To be honest, I can't quite remember. If it's a class as a G, you can't let it. And going further a few years on from that, if it's classed as a F, you can't even sell it. So basically, people have to upgrade their office portfolios and their tertiary portfolios. And One thing which is very interesting, we've been talking about it for a long time, but now people are actually talking about how much it's going to actually cost to do these works. And as I say, I was at a presentation yesterday, and a major investor in France saying, yes, they probably find that it costs them between 300 and 400 euros a square meter where they have to do some work. So I think it's a lot more than that. But now it's all coming into the valuations. The impact it has on the value if you don't do the works, if you do the works. And I think from a valuer's point of view, it's a tricky situation, but it's something which we have to be very vigilant on going forward. And it's a big subject which AVA, we're going to be discussing it at our annual conference in September, because I'd be very keen to produce an AVA paper on it to find out how this is being treated in all other countries, because it's not just a subject to France, it's a subject for you guys in the UK, the Germans, the Greeks, so it's everywhere. So I'd be very keen for us to produce a paper, our AVA snapshot, what we think the implications will be.
Thank you, James. It's going to be interesting how how investors and the market interprets and adapts to some of those changes. I know we've got something similar in the UK in terms of the EPCs, the Energy Performance Certificates, and MEES directive, which is the Minimum Energy Efficiency Standards, which they're trying to, there's a draft bill at the moment which they're trying to raise quite significantly to a band C. So that's going to affect a lot of residential property, and it will restrict the letting of that property. So I think sort of different governments are tackling the sort of green building slightly differently, but it's obviously with sort of a common goal of just trying to raise those energy efficiency standards amongst residential and commercial buildings.
One thing, in France, when we had all the BREEAM certifications, HQE certification, at the time we had lots of clients saying, well, what percentage of my value is the fact that I have this? And our reply 9 times out of 10 was, I can't say 10% of your value is because you've got this. However, by having this and having done the works, you have limited your downside. So what we can't say that 5 to 10% is linked to having done it, but we're just saying you've limited your downside when it comes.
Yeah, I think some of those changes are going to become ever so more tangible in the coming years.
Absolutely, I see that as well. Brilliant insight, James. Great question in Intel data. James, brilliant first show for EVA with our quarterly updates and our snapshot on the second quarter from France, more specifically. If you want all of the latest intel and data from EVA, please subscribe, follow the link so you can capture all of the yields across Europe for the retail market, the office market, and logistics. And you can get all of that information first and fastest through the EVA platform. And we will be back with you in quarter 3, where we will go to another EVA partner and we will provide another snapshot and another quarterly update on a different country from the European Valuers Alliance platform. Great having you. Hope you enjoyed the show. Great intel and data from James and James. And we will see you again across all of the platforms in the next quarter. Thanks, everyone. Thanks, James. Thanks, James.
Thank you. Thank you.
Thank you very much, James. Pleasure to have you on the show.